Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, January 20th, 2022. I wanted to get a video out to you guys early to follow up on that post I sent out this morning with the bullish falling wedges. I went on to follow up right after that post to let you know that I reversed, contrary to what I was saying yesterday and in the recent videos, sitting tight on the shorts for now. These wedges just look too good, too clean. It's just why I'm wired that way when I get such beautiful bullish falling wedges at at support as well with positive divergences. And not only that, so you have the indexes at major support. You have QQQ still flirting with my fourth target level, which was hit here. You had a little brief whipsaw down through it, but a recovery, and that, of course that's bullish when you break support and recover it. Look, nothing's changed intermediate to longer term. I expected a breakout, as I said this morning, and so I positioned ahead of it. And we're starting to break out, not much. I don't think it's going to go very far. I've already outlined levels that it would likely stop, and again, that would be the gap from what was it, Tuesday's gap, Monday closed, and Tuesday right there. That's probably a range right there. I think this breakout will get sold into, and I do not think it's going to be the catalyst for the move to new highs and or beyond, or even to the top of the range. That may change. I'm a very active, flexible trader. I may be short before this video is over, backed into my shorts. I just wanted to share that with you. You can see we're popping the wedges right now. And again, based on the fact that you have so many stocks at key support, it's simple. We still need to break that. It has not been an all-in short moment yet because we fell to key support, especially on SPY. Remember, that's that multi-month trading range. Let me drag it over here. I had the box right here and up to this point, but it just brings it over. I mean, look at how many times SPY has come in and back tested that breakout to highs there, and we're there again. So again, if reversing short, if it fails, great. I'll get back into my shorts from the longs, and I'll give up minimal profits. I'll lose a couple percent on doing that. And again, I wanted to say that near term, we might just very short term, buyers are going to step in. They're going to see these wedges, and they're defending support. But again, I think the bounce is most likely going to be contained, and that's short-term stuff. If I had a full-time job, did something else besides this, and didn't have the time, I know some of you guys, it must make your head spin. Be long, short. We could bounce here. We could go down. And that's the markets. If you want to be an active trader, you really have to be in front of the computer all day. If you want to be a swing or trend trader, I try to speak to all those positions, and so I would be fine riding out a counter trend bounce, whether that's it, whether it's just going to be a false breakout. As I'm doing the video, that's what we have here. There's a breakout candle. It's not big yet. We're not well past that level, but that could prove to be a false breakout. Or I think we'll probably get a little more upside traction today, and just as this thing starts to look good, again, there's my range, somewhere up to about 465.50 on SPY, all the way down to that resistance about 458, and it's a relatively small range. Anything's possible. We could certainly exceed that. I'll do other updates as well as the day goes on. Let me show you the futures real quick, and then we'll move on. I have a few new trade ideas for you, and I wanted to just again speak to a little bit more on the markets. So there's NQ, NASDAQ 100. There's your downtrend line right there. Enough reactions to make it valid. Reactions, another reaction there, and then boom, we just popped it. Positive divergence, and again, that's also T4 on QQQ, so that's support. And then ES, the S&P 500 E-mini futures, got it here somewhere. There it is. Same thing. Let me bring it in a little tighter so you can see that wedge. There it is right there. I'll pull that line up to there. So we're just starting to pop it, but that's it. So you've got nice support as well here on ES and the S&P 500, as I showed you, and bullish falling wedges and major stocks at support. So I just cannot make a strong case to stay short at this point in time. This bounce could certainly go more than just a few percentage points, but as of now, that's what I'll be looking for. One more, RTY, small caps. This is what RTY looks like. Same thing, positive divergence. And remember, the IWM starting to crack support, but not by a wide margin. This market and in individual stocks in recent years is far as I can remember, you almost have to count on or expect false breakdowns. I don't know. In the old days, we used to have just the market makers, those inventoried stocks, and would trade for their own account and added liquidity to the market. They would bring it down. They call it stop raid, take it down, hit the stops, and run it back. And now it's the algos just as much or more, computerized trading programs. Either way, so IWM has broken down. And look, that breakdown could stick. It has not failed yet, by recovering back above 208.50. But we do have positive divergences in place as well. And again, I showed you divergence here, not only in the daily, but also on the 60-minute chart. So that's near-term stuff. Now, back to my longer-term outlook and why I'm not looking for a run to new highs here. Okay, so this is important, and you guys may laugh if you've been with the site for a while because I've covered this a few times in the past. Years back, this goes all the way back to 2012, late August, and we did have a correction, a pretty healthy correction, I think about 12% shortly after that. I talked about predictions versus warnings because I don't mean to be Dr. Gloom sometime, but lately I've talked about all the conditions. Let me just read real quick what the difference here is. As per the national, and this is regarding tornadoes, I'll sometimes use the analogy for hurricanes because I'm in Florida. We're not in Tornado Alley, but I do have a recent analogy here. So as per the National Weather Service, a tornado watch is issued when conditions are right for a tornado to form, while a tornado warning is an alert that warns that severe thunderstorms with tornadoes, may be imminent. So in other words, the warning means there's a much more likely chance. This means hey, things may happen, and so we're pretty much, I believe, in this mode right now. Whereas, there's times where, and what makes it that way? Again, everything I've talked about in the technicals. The technicals, the way the charts are set up, where we are in close proximity to major trend lines, major support, key moving averages, the negative divergences that have been building on just about every single index and market-leading stock, excessive bullish sentiment in recent months, as covered again by a lot of those indicators, deteriorating market internals. These are all things I've covered in recent months here that have been building and reaching extremes, and that's why pretty much this would be my analogy to a tornado warning for the market. And then fundamentals, we have the Fed for the first time in a long time, almost guaranteed to start a rate hiking cycle. Now, it's been the juice that's kept this market going. It's taken us to where we're at right now with excessive easy money policies, near zero rates. And then add to that, the government, the stimulus is over. The government was throwing free money to everybody they could and their brother, when COVID hit, and since then, and that's also, as we know, drying up. So that's why we have a tornado warning. But does a tornado warning guarantee? I talk about the potential for a big drop, a 20+% drop in the market. That still doesn't guarantee it. If you live in Tornado Alley or you live in Florida, and you've gotten the hurricane watches, they give you first, then the warnings, chances are your house was not hit by a tornado or a hurricane. It may have been. And so my point is, again, all the conditions are right. That's what it means. And right now, those conditions, where in the past you can make a decent case at times for a healthy correction. Again, I think the odds are even higher. So here's a takeaway. I live in Fort Myers, Southwest Florida, and it's far from Iowa and Kansas. But the other morning we had a front come through, and our phones, my wife's phone and I, starts doing those loud beep beep, those emergency tones that you get only when there's a presidential alert, or if you're signed up for Amber Alerts in Florida, which are kidnapping, things like that. But it'll give you, the county will send those out, and so we got a hurricane warning. I'm sorry, a tornado warning with this front coming through. So I look out the window. Skies are definitely those tornado-y skies, all gray and winds moving, but you couldn't see anything. And just kind of shrugged it off. They said, get in your basement, take shelter. And, shortly after that, the power went out, and then I heard just a ton of sirens very close by. I've never heard so many sirens. Usually where we're at, it's a pretty quiet area, and just, it seems like they called the cavalry out. Anyway, make a long story short, it was a tornado. In fact, we had in Southwest Florida, which is the Naples, Bonita Springs, and Fort Myers area where we're at. I think we had about a half a dozen or so. But the big one was skirted my house. It was called the Iona hurricane. It was I'm sorry, tornado. It was an EF2. The scale goes from EF0. You have a 0 and a 1, which are mild or whatever minimal tornadoes, and then a 2 and a 3 is severe, and I think the 4 is catastrophic, or the 1 and 2. I forget the scaling, but I know this one is a severe, and it did some damage. And if you look at the map, I mean, the thing is, here's where I'm talking about ignoring these warnings. It doesn't guarantee you're going to get hit, but I'll show you right here. My house, which was just skirted, this is the path of that tornado. This is the Gulf of Mexico down here, down on the bottom, and that thing came right here, and my house is right here, literally. Right next to this thing, and again, I didn't see it, I didn't hear it, but I went out for breakfast that morning, and just about a block from my house, I started seeing the destruction. I mean, roof panels off, and trees, giant 100-year oaks snapped, and all that, and so it did quite a bit of damage. And again, that's point is that when you get those conditions, it does not guarantee a tornado. It doesn't guarantee you're going to get hit, but it certainly sharply increases the odds. So ignore those warnings at your own peril is what I'm trying to say. And look, I'm trying to guide you through there and tell you where the chances are going to increase even sharper. And again, that's those recent lows need to get taken out and those divergences. And then until then, and right now, because we're in close enough proximity of breaking down, despite the bullish falling wedges, that we could turn around, and by the time I'm done with this video, the market could tank, shoot through the old lows, the breakout fails, and again, if the breakout on those bullish falling wedges fail, then that's going to be a pretty bearish scenario. And because I like my analogy, I'm going to tell you just one other instance. This is the instance. This was probably 4 years ago, 4 or 5 years ago. I was up in North Carolina. I've been going there for since the mid 70s, and sitting on the porch in my dad's cabin, and my phone does that same thing, and I've never had this happen. I have an app on there. I have several radar apps because I'm a boater, and one of the radar apps must have had alerts turned on I didn't even know, and it warned gave a tornado warning, and I was with friends that I'd grown up spending the summers there, and he said we've never had a hurricane up here. He's a multi-generational family in Fleetwood, little town between Boone and West Jefferson, North Carolina. He said the mountains here are, the locals believe to be just too aggressive. You're smack up in the Appalachian Mountains, and they thought that would break up or prevent any tornadoes. Well, sure enough, we went into dinner that town, and town up the street, a little town called West Jefferson, and windy and all that. Next morning, we went the other way from in towards Boone, and through a little town called Todd, and you could see this is just one picture. I didn't even get to justice. You could see this tree line here that runs all the way here, and it looked like a god just reached down with a giant buzzsaw, big chainsaw, and just went right through the tree line there. And then you could see it also touch down on the other side of the river. We're driving along the river road there. All these trees just snapped in half. You can see through there. So again, the point is, look, that's the only time in all my years, I've only been in 2 times where I've received hurricane warnings. And both times, although I didn't get hit by the hurricane, that thing skirted, I'm sorry, I keep saying hurricanes, I'm wired that way in Florida, tornadoes, even more rare. And who would have thunk it up in the mountains, way up in the mountains of North Carolina. Anywho, it happens. So like I said, be on alert. That's it. That's all you can do. You don't have to run down your basement right now, but if we take out the recent lows, you might want to take shelter or get into your shorts, add to your shorts, or start to tighten up stops on longs if you are adamantly bullish. Okay, I've said enough on the markets, and I'll continue to update, as things go. And again, I'm just going to do updates on not all, but a couple of the recent trade ideas. Give you a few new ones. Metals, and this is again, it speaks to being diversified. So let's just say you're a swing trader and you didn't get the message this morning, or you're going to ride it out. So you're short the markets, and but you're long precious metals. I've been pretty adamantly bullish on those, especially recently. And there it is, silver, up another 1.5% today. SLV, the ETF that is, gold's still moving up, and you look at the futures, and they're doing well as well. Gold's up. It's trying to looks like it's flagging here on this 2-hour chart. Maybe flagging there. Whether or not this flag breaks out, there's your bull flag movement there. We could take us up there. Will likely depend on what the market does, but not necessarily. And again, that's why I trade them on their own technicals. You never know, and that's the beauty of being diversified. One day, one of your positions will be down, and hopefully the three others or whatever, how many you have, are up. And so I just want to say those look good there. Silver looking good. Look at that rip in silver. It just, keeps going right through each of the support levels it hit. It's getting stretched. Do you chase it now? Probably not, but no, I'll continue to update these. We need a little more work to do, and I think I just showed you silver, SLV, the ETF, and gold. Gold's at resistance, backtesting this trend line 172 resistance. So, if you're a very active trader, you could probably take some profits here. But I'm more apt to sit tight now because these guys could power through these levels. And there's SLV at resistance 2276. Let me give you the other trade ideas that I have for you. This one, some of these, starting to move a little more today. I noticed this one. I had a breakout on it the other day. Should have got it out to you. Been a little hesitant, but I'm going to start sharing trade ideas, long or short. And so far, I like the action. Broke out on high volume. That's number one, what you want to see on a breakout. There's your breakout candle right here. Let me change the color on this circle tool. There's your breakout candle. You have a huge volume bar. That's exactly what you want to see. Consolidated the next day, but then it's moving up since. And you probably want targets. I just have a small position in a longer term account because there are, some stocks will march their own drumbeat. This one's resorts and casinos. You would think not doing great with COVID, but anyways, nice chart. So I think we're going up, probably hit that. You got a little bit of resistance right here. Yeah, we need to break 1170 and then 1238 and then possibly 1466. I've had this one on my scratch pad for a while. I think we've already missed a turn now. I'm just looking at it. Yeah, I didn't look at it earlier today. It's already down too much to chase. My bad. I was looking at this back here. This is one I updated way back when on the site. It came down to support this divergent low right there. You broke out of that little wedge type pattern. You had a downtrend line, ripped up, but right into a resistance zone. And so I had it on as a short for a pullback trade there, but it's already down 13% today. I'm sorry I didn't know that before I started the video. So let me move on to the next one. This one's a short setup, but not actionable, because if the market bounces, this one will probably bounce. It's pulled back to trendline support. RYI, it's a metal fabrication company, and just recently put in a big divergent high. It's had a heck of a run up. And so it would be a short on the break of this trend line. You have minor support at 2165, but I think it's going to go down to at least that 1790-ish level right there, which would be a healthy drop. But again, need to break it. When I share trade ideas, I have two types. I have trade setups and actionable trade ideas. A setup needs to trigger an objective entry, whether it's short or long. That's going to be about a 25% drop. So set a price alert, and that's it. If it breaks, you want to check out what's it doing, what's the volume look like, what's everything else doing at the time, and then one idea for you. I have a question mark by this one. Let me see. Oh yeah, this one also you can look at it either way. I think it's going lower ultimately, but I think it's going to bounce first. It's had a heck of a correction. It's been a big performer in the last year or so. It's already dropped about 20%, but it's coming up to both uptrend line and price support about 536.34. We're really close. So I think another bounce. Ultimately, it'll probably break that level, but a bounce on a stock like this, you're looking at double digits. So you could buy it there around support with a stop somewhat below and either let it ride or target a bounce back to maybe that 632 level right there. Remember, if the market falls apart, I just spent a little bit of time there talking about, potential warnings in the market right now. And again, they may or may not materialize. That's all it is. The conditions are ripe for that, but it does not guarantee that. So I'm going to spend enough time doing that. So point being is, yeah, you get in this, and you're targeting 631. That'd be a 13% bounce. But all of a sudden, the market just the bottom falls out of it. You're going to see forced selling in just about everything. BX Blackstone looks like a potential bounce candidate. It's going lower. I see like all the charts, just about everything I look at now looks bearish. In this one, but this one, keep in mind, it's already had a pretty healthy correction. There was our divergent high right there. And from the divergent high, this thing has already fallen. That's a big company, Blackstone, of course, big financial. About 25%. You got good support here at about 108.67 is where I have the line, which is just a hair below the trend line. So again, another bounce candidate for those if it might be considered picking up nickels in front of a steamroller, because if we get the bounces, ultimately I think that trend line and that level is going to break, and we're going to go down a lot farther in this stock. But even to trade a bounce that's double digits, that's what swing trading is all about. Get in, get out. So it really kind of, to me, boils down to the fact the markets, are they going to make one last stand here, one last hurrah for the bulls, based off, rally off these support levels I covered this morning, and will those divergences play out for a tradable bounce? There's a decent chance, and if so, then I'm giving you some trade ideas to game that with. Let's see, what else do I have? Not my favorite, but one that I wrote down. ACLS. You have price support there at 60.70. You have a divergent high, and last time we had a divergent high, and this was smack in the middle of the bull, off the rallies from the lows in 2020, where there was tons of momentum in the market, and that thing still corrected 32%. So although it's had a decent drop so far, about 19% from the highs, I think will ultimately break this level. So I would have this one. You can try to game the bounce. There's nothing wrong with that, or wait for a break of 60.70 to either stop out of that long or short it, and next stop would be 50.30, and possibly, quite likely, more. But as of now, that's my swing target. But again, only a setup on the short side. More so be a long side trade idea right now if you want to game the bounce on individual stocks instead of the market. I didn't mean to even cover that one, but that one's got nice support around 70, but $7. I'm sorry, TNP, but I hit the wrong button here. The other one, when the dam breaks, the market is SOX, the semiconductors index. I think it has a long way to fall. We've already had a break of this, the yellow line. I already covered this recently, 507.23. We're a little bit below it now. So that's why it's still not, if you're going to game a bounce right now, it's certainly a very aggressive. It's not an all-in moment. Again, I made the case on those 60-minute charts. And the thing is, your sport's not far below. So if you're wrong, or I'm wrong on a little near-term bounce here, I'm not going to be very wrong. I'm going to be wrong to the tune of about 1% or so, because that's it. We're just about 1% off those lows, or were this morning when I pointed those out. So anyway, that's it. Let's keep this one short, and we'll continue to hunt for trade ideas, both long and short. I'll do updates on the commodities soon. But everything else, I'm looking at my charts. Bitcoin holding up today. I'm looking at a different screen. I already covered gold. Treasury's kind of holding up. Yeah, not much else to report. These are the things I wanted to show you. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.